tariffs, because the way they work, they're not going to bring in any amount of revenue. That's just wishful thinking. More volatile markets, worse relationships with trading partners, economic stagnation while prices go up. That's absolutely something that we can see.
All right, so today I'm joined by Joe Brown of Heresy Financial. Joe, I want to thank you so much for joining us on the show again today.
Yeah, of course, my pleasure. Thanks for having me back on.
So great day to have you on, as I know you're an expert in all things U.S. Um, let's talk about the elephant in the room: these tariffs. President Trump imposed 25% tariffs on Canada. We've retaliated with 25% tariffs on the U.S. Any initial thoughts?
You know, I'm going to take a little bit of a broad level approach to this tariff conversation, and I'm going to talk about um, the kind of the history behind it. So, when Trump on this last campaign, he talked a lot about the golden years of America and how the largest period of economic growth in U.S. history was between about 1870 and about 1910. During that time, the federal government financed itself with only tariffs and other various taxes, but no income tax. And has implied that he's going to work towards trying to bring that back, do that again. And there are a couple issues with this. So number one, it wasn't just the period of 1870 through 1910. It was all of U.S. history up until 1913 when the federal income tax was finally legalized. There was a brief period during the Civil War where Lincoln imposed an income tax, and after the Civil War, it was repealed because it was ruled unconstitutional. And there's a lot of legal debate about this, but at least in the United States, that was a big legal battle for a long time until 1913, which also was the year where they started the Federal Reserve, and so that year is kind of looked at by many like myself as a pretty dark year in U.S. history. But one of the reasons why they were able to get the income tax passed was because of all of the problems with funding the government through tariffs. One of the big problems with that is it's very, very difficult to make it even, widespread, and fair across the board. There are a lot of ways to get around the tariffs, a lot of easy loopholes, because you can't just you have to define things very, very specifically on what products count as having the higher tariffs, where they have to come from. Okay, well, what if it's, what if it's a tariff on stuff that is only manufactured, let's say, in Mexico and then imported to the United States? So what if they say, okay, well, it wasn't manufactured in Mexico. Let's say it was manufactured in China, and then it just goes through Mexico on the way. Then it's like, okay, well, does that count for the tariff? And if it doesn't count, what is the percentage? How much of it has to be manufactured in China versus Mexico? So it gets really, really messy to the point where the expected tariff income is always much, 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 much less than the initial plan because there are so many ways around it. And so then you have to keep on jacking those tariff rates up and on newer countries and newer things. And you end up having a small group of corporations and individuals who have worked out these deals in order to get around the tariffs, and everybody else is kind of picking up the slack, in other words, getting screwed. And a good example of this is something called a chicken tax. For years, there's a higher tariff on cargo vehicles being imported versus passenger vehicles. And so what Ford would have to do, and this was actually cheaper for them, believe it or not, they would manufacture a passenger van in Mexico. They would import that with all the safety features, the seat belts, the seats, everything like that. Once they would get it across the border into the United States, they'd pay people to rip the insides out, just to gut it, take all the seats out, the seat belts, everything, and turn it into a cargo van and then sell it as a cargo van. And the money that they saved on the tariffs that way was more than the savings from not paying for all that extra labor, not paying for all the extra material and parts. And so this was ultimately looked at as, as fraud, and they got fined, and the government ended up stopping them from doing it. But this kind of thing happens every day, everywhere, all over the place, because it's so easy to game this system. And that was one of the reasons why they were like, all right, we're going to get away from tariffs and just pass an income tax, because then it's just more fair, it's broad, it's a lot harder to, have loopholes that get around it, and you don't have as much corruption at the top. That's the main issue with this, is that tariffs, because of the way they work, they're not going to bring in any amount of revenue. The second problem with this is that it's it's not possible to get anywhere close to the amount of income that the U.S. government needs for its current level of expenses. Now, I'm a big fan of lowering those expenses as much as possible. Heck, let's take them to zero. But that's just wishful thinking. That's not going to happen. And so the idea that you could replace income taxes, or even cut income taxes by a lot and replace that lost revenue with tariffs, it's that's also wishful thinking. It's just never going to happen. And so the end result is going to be more volatile markets, worse relationships with trading partners, and ultimately just a larger deficit, because there's going to be less tax income overall, and they're not going to be spending significantly less. And so the result is going to be a larger deficit.
And I think, excuse me, and I think I'm glad that you put it in those terms, as in terms of what this is going to do to the United States. So what you're saying is the net benefit isn't going to outweigh the net gain isn't going to outweigh the problems that are going to come to the economy.
That's what it seems like. The one little kind of caveat to that is that maybe this is just a big ploy for negotiations across the board. We'll have a year of volatile tariff announcements and retaliations and changes on the rates and new agreements coming up, and all of that, the just changes across the board. Every week we wake up and there's a new deal or a new announcement, and it's all just for negotiation purposes. Um, if that's the case, then maybe the net benefit long term might be there. But the other thing that you have to look at is there's no, like Thomas Jefferson said, and I'm going to butcher the quote here. He said, we need to have, be friendly, and, have commerce with everybody, and not have entangled alliances with anybody. And it's kind of the Switzerland model. They were able to stick to this very decentralized, independent, neutral, bottom-up government, that the United States government was kind of established to look like that. And Switzerland has been able to stick to that for a very long time. They've been very successful at that, and it has brought them a lot of wealth and a lot of success. And nobody hates Switzerland. In fact, everybody wants to go there. Everybody wants to take their wealth there. Everybody looks at them and just, they're doing their own thing. They're not making anybody mad, and they trade with everybody, and they're very well off. The United States has slowly, over the past, I don't know, 100 years, probably since Woodrow Wilson got us into World War I, slowly escalated and ramped up its entangled alliances with various nations around the world, and there is no net benefit to doing that. I'm talking from a commerce standpoint. The best strategy is to have it's people call it free trade, but we actually need real free trade, where there's no extra imposed costs from the government to doing business with anybody in the world, and there are no subsidies to doing business with anybody in the world. The world should be treated like the free market that it actually is, where you buy the best goods for the best prices, regardless of where they come from. And that's it at the end of the day. And competition will solve everything else.
Sheep and grapes and no one else interfering
Hmm.
back and forth, right? Like Ricardo. That's how he
Oh, okay.
initially explained it, right?
Yeah.
So yeah, I was going to say, when you were discussing Switzerland, it certainly seems like a very pre-World War One vision of the United States, sort of trying to return to that, what I guess they would say was a capitalist utopia, like pre one, before very isolationist.
I I don't even like the term isolationist because
Yeah.
that implies that there is some sort of top-down coercion to block off the outside world. And it's actually the opposite. We're saying, hey, there's going to be no restrictions and no subsidies, no extra benefits, or no extra costs for any business relationships with anybody, regardless of where you're at. And so that's it. In my opinion, that's like the opposite of isolationist. It's do business with anybody anywhere. And it's possible that places like India or China will attract more manufacturing business, or they'll have cheaper labor. But it's like, eventually that arbitrage situation works itself out, because if I can hire 10 people in the Philippines for the price of one person here, and each person is as good or sometimes even better than an employee here, well, then everybody eventually will realize that, and all the money flowing there will bid up the price of labor, and it will all work itself out eventually. And because of comparative advantage, there is no reason to try and artificially stimulate the spending on local labor for a specific thing. That just increases costs and therefore decreases wealth overall. If let's say I'm an attorney, and I can type at, let's say, 100 words per minute. I'm a fantastic typist, but I make 500 bucks an hour. I can bill at 500 bucks an hour. Then it makes no sense for me to spend my time typing, because I can hire somebody to type for me for $50 per hour. Even if they can only type at 20 words per minute, it still makes more financial sense for me to pay somebody else to do something that they are worse at than me, because it costs me less to pay them to do the same amount of work than it would cost me. I can use those hours for, billable hours instead. So that's the idea of comparative advantage. Around the world, it would make no sense for us to artificially spend more of our own on our own labor for a particular thing if we can hire somebody else to do it for cheaper. Doesn't matter where in the world they live. So the idea of comparative advantage would solve all of the artificial increases and decreases in wealth that happen around the world as a result of government restrictions and imposing, hey, you have to, you're going to have an advantage to doing it here or a disadvantage to doing it there.
So these tariffs in the not just for the United States, for Canada, for everyone, when the governments gets involved, when we add these artificial taxes, we're creating inefficiencies, and
Mhm.
that's going to show up in production for everyone, not just for the United States, for everybody.
Yeah,
Yeah.
exactly.
So now I've read two points of view on these tariffs. One is that they're short term inflationary, and long term not really. We'll see one immediate price bump and then they're gone. And then others say that this could lead to an inflationary cycle. What's your take on how these look?
That's a good point. Part of that depends on, how long they last for, and how sticky they are at the currently at the current rates. And so that depends. The other thing is, how easy are they going to be to get around? Like I was talking about, how many little loopholes are there going to be? Um, and so then the final piece is, okay, well, let's just take a look at, you have one widget that now costs an extra 25% more. If you keep on purchasing that item, the end consumer is going to pay 25% more for that item. So their cost right there is going to go up. Assuming there's no increase in the money supply, that just means you have less money to spend everywhere else. And so while you might see some of those imported items get more expensive, that actually pushes down the prices of everything else. And so that's why there are some people who are speculating that if the Trump administration's goal is to stimulate the economy, and the best way to do that is to drastically increase borrowing and lending, but we can't do that at current interest rates. And we can't just print money because of inflation. We can't artificially push interest rates down because of inflation. Well, now you got to deal with the inflation problem. So if you jack up tariffs on everything coming in, and you cause really tighter financial conditions, because so things that are being imported cost artificially more now, then you push down prices of everything else, and then the inflation metrics get better, so interest rates can go down. And so that's one path that some are expecting. The issue is anytime you start centrally planning complex systems and you try and turn dials and move levers on a complex system, and I mean that in the technical sense, there's always going to be unintended consequences because there are an infinite number of feedback loops that are not possible to predict ahead of time because you've got 300 million actors who are all making decisions based on ranked order subjective valuation every single day. You cannot make predictions in a system like that. And so you start to mess with these input dials, and eventually you get things that happen that you could not have predicted, and you end up with, at the end of the day, misallocation of resources and malinvestments. And in other words, you got little booms and little busts that pop up all over the economy as a result.
So, speaking of central planners, um, if the economies take a hit from these tariffs, both the United States and Canada, you mentioned that that the central banks are limited in how much they can print now because of inflation. Are they in a position where they can drop rates? I saw today that the Federal Reserve, they're now expecting three cuts when it was just 2 weeks ago when all the cuts were written off for the rest of the year. Will we see enough demand destruction from these that they can cut? Or what's your take on that? Like, how are we going to respond to this?
Yeah, I don't. I wouldn't anticipate that. The only way that we would really see that is also with an extreme economic slowdown. So if you look at what Scott Bessent, the new Treasury Secretary, has been talking about a lot lately, one thing that he's been really keen on, like making a point of, is that everything that we're seeing in the economy right now is still what he calls the hangover from Biden. And so, if if they are able to kind of push the stock market lower, and if they are able to slow down economic activity, and if they're able to fire enough federal employees in order to make unemployment go up, and if they are able to stop enough government contracts to slow down hiring and spending with a lot of these companies in the private sector that have been just living off of the dole of the U.S. government and the taxpayer, if they're able to do that, then on a broad to enough of an extent, then on a broad level, it looks like from the broad numbers an economic slowdown. Even though every single one of those things would actually be much better for the free individual who's just participating in the free market only. Um, Overall, the numbers might look suppressed. Like if you look at what happened in Argentina when Javier Milei took over, instantly the inflation numbers month over month started dropping every single month from the second month he took office. Every single month the inflation numbers month over month were dropping. um, GDP numbers started increasing almost immediately. One thing that looked worse was poverty and unemployment went up. It's because everybody that was receiving money from the government suddenly stopped receiving money from the government. So for those people, they were worse off. That is true. But everybody else was much better off because there was more wealth left in their hands to do with what they wanted. And so if they're able to do this, then on a broad level, maybe the economic numbers look bad enough that the Federal Reserve is able to say, hey, we can ease financial conditions without risking inflation. The problem is, though, we really have a long-term debt cycle at play here. From the 1940s through the 1980s, we saw inflation move higher. It was volatile. Sometimes it was up and sometimes it was down, but overall, for 40 years, it moved up. During that same amount of time, that same time frame, we also saw interest rates get pushed higher. During that same amount of time, you saw the debt to GDP from the government decline because it peaked after World War II. And so, in order to get that fixed, they had to offload the pain of the cost of that debt onto the economy. So, it was a 40-year long inflationary deleveraging from the government. Deleveraging, not in an absolute sense, but just in a percentage sense, that their debt compared to the GDP. And so the way that that happened was higher interest rates, higher inflation. And there were times where it went up and down, but the overall trend for 40 years is up. Once the debt to GDP ratio got to about 30%, it was no longer a concern. Inflation peaked at, 20%. The federal funds rate peaked at, something like 20%. And around 1980, that trend peaked and started to reverse itself. From 1980 through 2020, that was the next phase, the next 40 years of the long-term debt cycle. During that time, interest rates lowered and inflation lowered as well. So we had disinflation and lowering interest rates for 40 years. Well, what happens if you're a government and interest rates move lower for 40 years? You're able to borrow more and more, and the cost of paying for that debt really always stays the same. And so they're able to load up on more and more debt because the interest on that debt keeps on getting cheaper. So you're every time interest rates go down, you're the government, you roll over your debt to a lower interest rate. So you can borrow more and more and more as time goes on because the economy is growing and also the cost of that debt is getting cheaper. Well, you can't go below zero. So in 2020, everything hit zero. And not only that, but we had inflation break out for basically for the first time in like 40 years. And so that reversed the trend. That was the bottom of the trend. Rates can't go below zero, and inflation started again. And the other thing is, the government's debt to GDP ratio also peaked at 120% yet again, just like it did at the beginning of the last cycle in 1940, 1945. And so we're in a long-term debt cycle here. We're in the deleveraging phase of the long-term debt cycle, just like 1940 through 1980 again. And so we're going to see higher rates, we're going to see higher inflation, and we're going to see a deleveraging and an inflationary deleveraging from the government where they print money, offload that debt onto the cost of the debt onto the economy. And so we will have times when it moves down, when inflation and rates move down, but ultimately that is just one little part of the cycle in the broad overall multi-decade cycle where we're going to see higher prices, higher rates, and the government's debt to GDP ratio will continue to move down.
So then DOGE then, and a lot of the efforts that the U.S. is undertaking now, you don't see that it can't pull enough out to fix the deficit problem.
Well, it's not that it can't. I am just very skeptical that it will.
Okay.
So when you look at the main, like you could take the entire discretionary portion of the U.S. government's budget to zero, and it still wouldn't solve the issue. The U.S. government spends $1.2 trillion a year just on the interest on the debt alone, and every year that goes up. Even if the debt doesn't grow, that number goes up because they're rolling over debt from lower interest rates to higher interest rates. And every year that they run a deficit, the debt goes up, which means that now you're paying a higher interest rate on a higher amount of debt. So just that alone is a spiral that even if you take the entire discretionary portion of the budget down to zero, that still happens. Um, when you look at military spending, Medicare spending, Social Security spending, those are the ones that are kind of snowballs rolling downhill. Very, very difficult to stop. Everybody on the receiving end of that is very powerful. And when you talk even Social Security, that's a huge, that's most voters basically. And so everybody on the receiving end of those big three things are very powerful, and they will fight till their dying breath to make sure that they don't lose a penny of that. Um, and those are the people who put the people in the government.
Right.
So if you are in a position of elected power, you're not there if you try and if you do anything to slow down the gravy train. Um, and so everything that DOGE has done so far is, in my opinion, from what I've been able to tell, very good. Like it's good you're finding spending on things that shouldn't be spent. When you look at like software licenses, every department, if it's got 8,000 people, there's 10,000 software licenses. It's like, why are there more software licenses than there are people working in that department? Most of them are not even being used anyway. So there's a lot of waste. A lot of that, when you talk about waste, it's a lot of that is, okay, there was a friend, a buddy, somebody who was connected, and they say, okay, we're going to get you this big contract. And so it's fraud because of that. It's not that it's like, outright straight up theft, but it's awarding contracts that are not needed for way higher costs than are necessary or justifiable because you know somebody. Um, so there's a lot of that kind of stuff going on that I think is good to get rid of, but it doesn't make a dent unless you can significantly change the direction of the other big three: Medicare, Medicaid, Social Security, and military spending.
Right.
Um, and without significantly changing the direction of those, then the long-term debt cycle continues to chug along in the same direction.
So military stays where it is. Social Security, it's the third rail. That stays where it is. Medicare, Medicaid, everybody's bought in. Um, U.S. deficit continues, and that's inflationary.
Yes. Yeah.
Okay. And then we have these tariffs. Those are inflationary. That's going to, or potentially inflationary, depending. That seems like it's going to, but at the same time, so we've got all those things at work, but the 10 years dropped 60 basis points over the past 2 months, 2 or 3 months now. So
Mhm.
it seems like US borrowing costs are coming down, or at least the market anticipates, or the market's pushing them down. But I know a lot of people have thought that, or have said that the 10 year could go to five. Do you think it'll reverse back upwards then? Or like what, why are we seeing it come down so much?
Yeah, good question. When you look at the magnitude of the move from 2020 through I don't know, probably like mid 2023, the 10-year moved from, 0.5% up to it just peaked over 5%. Like that's an absolutely incredible move. And so anything that moves that fast, that much, you are going to absolutely see some consolidation and some volatility and some sideways action from there. Um, and so that's part of what we're seeing right now is like, hey, there was a big move. This thing is obviously going to move sideways for a while. Now with like the 10 years specifically, there's a lot more there's a lot more fundamental um, action behind that move rather than just technical. But you can't ignore the technical. That takes an incredible amount of energy to move something to that extent. Um, the fundamental aspects behind the move right now are, um, hey, when the Federal Reserve started lowering rates, everybody realized that's too soon. So the long end went straight up because hey, they're going to reignite inflation, and so long-term interest rates are going to have to go up for that. But they since stopped and they said, okay, well, we're not gonna keep on doing this, and so now the market is adjusting for that. Um, there are also just short-term moves like if you expect that there's going to be a slowdown in the economy, then money's going to flow into bonds. Um, at the very least, because hey, if there's a significant enough slowdown, the Fed lowers interest rates. That means that I want to be in bonds first. So um, that you kind of have a little bit of a front running taking place there. So all that being said, just I don't know, get short and sweet. I think short term, there's a very, very good possibility that the 10-year moves a little bit lower. The long-term trend is going to be higher. But short term, yeah, some volatility, a little bit of a move lower from here. Absolutely.
Now, I want to ask you because we talked about the tariffs earlier, but I want to transition to the planned tariffs, not just on Canada, but on Europe. We have more on China. And you mentioned the sort of vision of going back to the pre 1914 U.S. era. Does he have time to get this done in 2 years? Because it seems to me like these are massive, massive changes, almost an unraveling of the post World War II order. Can he do that in 4 years? It just seems like that's a massive transition process.
Well, not by himself.
Okay.
So that's the thing with a lot of these things is that um, a lot of things that we're talking about cannot be done with executive order alone. You can do a lot that way because in the U.S. government, the separation of powers is for, the creation of the law, the interpretation of the law, and the enforcement or the execution of the law. And over the past 50 years or so, Congress has said, okay, well, we're going to let the executive branch legislate. And they do that through called rules and regulations. And so the executive branch has all the agencies that are supposed to be there just to enforce the laws that Congress writes. The Constitution, Article 1, Section 1 says the ability to make laws rests solely in the power of Congress. Nobody else can make laws. But the executive branch, underneath its agencies, they come up with rules and regulations. And the courts should have initially just said, no, you're not allowed to come up with more rules and regulations because you're enforcing those as if they're law, but they're not because Congress didn't write those. But what the Supreme Court did was said, well, you're the expert in that little area. And so if you want to come up with extra rules and regulations, go ahead. And so the Supreme Court just implicitly signed off on this. And so you had for 50 years, the executive branch grew and grew and grew in its power because it was basically able to write all these new laws, or, they're not real laws, but they're enforced as laws. On top of that, anytime there was a lawsuit where somebody who said, hey, like, you can't do that, this isn't law, the the lawsuit that would happen, the Supreme Court would look at that and they'd say, okay, well, we need an expert to come in and interpret the law here instead of, that's the Supreme Court's job, or I should say the judicial branch's job. They're supposed to interpret the law, but they said, hey, well, the executive branch agencies, they're the experts, so it's called the Chevron deference. We will defer to those agencies in their interpretation of the law. And as long as it doesn't violate anything explicitly that Congress has already passed as law, then we'll let it stand. And so for decades, we've had the bloating of the executive branch where they've been able to come up with new laws, enforce those laws at their own interpretation. And as long as it doesn't violate something Congress has passed, then it's just automatically going to be accepted. And so the Supreme Court over the last couple of years has slowly been unraveling that and winding that back. But at the end of the day, anything that's been happening underneath the executive branch can be unrolled through the executive branch. And that's most of what the government does today is underneath the executive branch. So you can get rid of a lot of that will equal more wealth and more prosperity and more freedom for Americans and businesses. But at the end of the day, a lot of the stuff that you need for to change the direction of where we're going, you do need Congress as well. I mean, if you look at the spending plan that they just signed off on, it's like they're spending more. Like what everybody voted for cutting spending, and that didn't happen. It's like that's why I've been saying this whole time. It's like you're probably not going to see everything turn around. It's probably not going to happen. It could. They just have to do it, but it's in their interest not to.
There's so many conflicting interests. I think there's this idea out there that the executive can do whatever the executive wants, and that's just not the case. And we focus so much on the presidential power, and it's just not the case. There's entrenched interests,
Yeah.
and Congress isn't just going to go along with everything just simply because it's President Trump.
Right.
Yeah. Um, so let me ask you, because we're seeing more and more in Canada, but especially in the States as well, talk of stagflation as this goes on. Any thoughts on that?
Yeah, absolutely. I mean, economic stagnation while prices go up, that's absolutely something that we can see, especially because this cycle that I've been talking about is not um, unique or isolated to the United States. These are largely the trends that the rest of the world follows, not completely universally, but broadly pretty close. And so when you see the government needing to offload the cost of its debt burden onto the economy, the way that it does that is through expanding the money supply and through various means, artificially forcing their own interest rates lower, which those two things together push everybody else's interest rates up. So costs of everything go up, interest rates go higher, and that restricts economic activity while prices go up. And so you might still have some growth, but having stagflation or something very close to it, you could absolutely see that in many places around the world.
Possible. Okay. And I wanted to get your thoughts as well on Scott Bessent's comments and what the Treasury did a few weeks ago. Bessent was up in arms about the how Yellen was issuing the debt, and then they did the exact same thing. Do you
Yeah.
think he do you think he got into office and realized what the position looked like, or was this all smoke and mirrors? Or because it seems like they really showed that they are limited in how much they can do.
Yeah. Part of it is the lack of liquidity in the system for that longer term debt. If you look at the auctions for long-term treasuries, that for a couple of years they have not been going very well. You're seeing a lot of auctions with large tails, which means there's just not as much money stepping up to the plate to say, "Hey, yeah, we'll lend to you at these rates." And so, if they were going to try and roll all the short-term debt over into longer-term debt, you have much larger auctions, which means they're going to pay a lot more. Potentially, even you have an auction go no bid, which is not a good sign for the the bedrock of the global financial system. And so, in order to keep up appearances, you got to keep those long-term auctions as small as possible, which means you're rolling over the short end. The other thing that could be at play here is they're looking and saying, hey, we've got a plan. We're going to slow down economic activity. That's going to give the Fed room to lower short-term interest rates. When they do that, T-bills go down. We refinance a bunch of T-bills at low rates. We use that to get out of a short-term mess. And then by the time those have to get rolled over, we'll have fixed some of the problems at the longer end, and then we can roll over to longer-term debt. If that's the game plan over the next 4 years, I think it's probably a bit of a long shot, but it certainly could be something that they are looking at.
Now, this had entered my mind before, and I don't like to think conspiratorial. You don't think that they could be purposefully trying to weaken the economy to drive rates down? Do you think am I way out in left field on that?
I would be surprised if they're looking at this and thinking, let's purposefully weaken the economy. But they are looking at this and thinking, hey, there's a lot of um, like misallocation of resources, malinvestments. There's a lot of areas that are doing artificially well. And we've got a short period of time here where anything bad that happens, we can still blame before. If you try and fix things without anybody experiencing any pain, you don't end up fixing anything. Like I talked about with the example with Javier Milei in Argentina, there are a lot of people that lost their paychecks. There are a lot of people that got off government support. There are a lot of people that lost their jobs, and it was worse for those people. It was better for everybody else, but it was worse for those people. So he just didn't care. He said, "We're going to do what it takes." And yes, the poverty rate will look like it goes up. Unemployment rate will look like it goes up. I don't care because it's going to be better for everybody long term. And by the way, their GDP is just exploding right now as a result. And so it's possible that they're looking at this and thinking, hey, the goal isn't the pain, but we just know that that's necessary to be able to get to the other side and do the things that we want to do. And so, we'll be able to point the finger as long as we get that pain out of the way sooner rather than later. So that certainly could be something they're thinking about. We'll see.
Right. Okay. Um, how about gold? There's talk about revaluing U.S. gold. What's your thoughts on that? Because it's been much more in the news than it has been for the past decades. So what say you?
Well, gold right now is high. Do you even need revaluation? It's up 50% in the last year.
Yeah.
So gold has been doing extremely well. If it's not a part of your portfolio by now, it's like, what are you doing? It's very clear that gold is a store of value. It's been that way for thousands of years. It will continue being that way for potentially forever. You can't print any more of it. Central banks continue to buy it at record paces because it's an asset that is nobody else's liability unless you store it somewhere. And
Yes.
that is kind of the key that's been driving a lot of this price action recently is that the Bank of England doesn't have the gold that they say they do. And the paper markets have been over leveraged for many years. And it was just a matter of time before the physical kind of catches up to that. And once the delivery requests start, it's like it's a bank run on gold. And so that's what's been happening over the last couple of months that's been driving the price of gold up higher. Oddly enough, it seems like there's been a massive amount of gold being moved into the U.S. And then they've been talking a lot about checking out Fort Knox live video stream of an audit to see if the gold is there. Trump has made several remarks about, I hope the gold is there. Maybe it's not. Somebody might have stolen it. Like, but I hope I hope it's there. Like, some odd comments. And so there's an asset that everybody wants, and everybody tries to get it when you need it most. And I don't think a revaluation is something that is going to do anybody any good. And so there's two ways that people, two things that people mean when they talk about revaluation. Number one, they say, okay, well, right now on the government's balance sheet, it's still listed at well, $40 or $50 an ounce. And they've got a lot of gold, so we need to just update that to market value because it's, $3,000 an ounce. But at the end of the day, they're not going to sell it. So what's that going to do? That it's just an accounting change. So the only reason why they would do that is so that they could leverage it or use it somehow. And that just means inflation. That just means borrowing because they're not going to sell it. It's not going to be withdrawing liquidity from somewhere else in replace of gold, and then that purchasing power is transferred for the government to spend. It's going to be creation of new purchasing power units, creation of new dollars. So they're going to borrow against it or something like that. And so a lot of people speculated, okay, well, the US announced we're going to have a strategic wealth fund or a sovereign wealth fund. Scott Bessent said we're going to activate the asset side of the US balance sheet. The only asset the US government has is gold. And so maybe they're going to move that into the sovereign wealth fund and borrow against it or do something with it. But then he came out later and said, no, I wasn't talking about gold. So it's like, maybe he just, didn't mean anything by that comment, and just said, hey, we're going to start buying assets again instead of only having debt and liabilities. I don't know what he meant. Maybe he meant they're going to start buying stocks, which would be a disaster. But so who knows what he meant by that? But that's one thing that they meant by that people mean by revaluing is just, hey, we need to update the dollar value of the gold that the U.S. government holds. That wouldn't do anything unless they're going to use it as a way to print. The other idea would be to make a legal declaration of the value of gold at a much higher price than it is today. And that would be a way to try and fix the debt situation. But again, gold is not actually worth, let's say, $50,000 per ounce. So if they were to legally declare, hey, gold is worth $50,000 an ounce now, um, that's a misallocation of resources. That is price control over an asset, um, and it artificially changes that price. And so, who knows what the consequences of that would be? But one of them would certainly be printing because the only reason you do that is to deal with the debt. But the debt, in terms of the purchasing power that's been borrowed, is actually there. And so, if you do that in order to artificially wipe out the cost of the debt, then now suddenly the government has a lot more purchasing power that it can spend elsewhere. Right now, as they pay back the debt, that purchasing power gets siphoned out of the financial system, siphoned out of the economy. And so, ultimately it's a dishonest way to try and deal with the problem. The best way forward is to just with austerity spend less and slowly but surely turn the direction around. Run surpluses, and that's not going to happen. And so any alternative outside of that is inflationary.
Now, while we're speaking about reserve assets, the focus on crypto at the top. What do you make of that? I've always maintained that the United States will never allow itself to depend on a currency that it doesn't control, that it can't print. But we're seeing all of this talk about a Bitcoin reserve, Ethereum reserve, what have you. What any thoughts on the motivations, or what do you make of all this?
There's a couple things that I think are the motivation behind it. One of them is um, when Trump was campaigning, I don't know if you noticed, but the tech world largely shifted from the left to the right and got behind Trump. And the tech world heavy into crypto. And so that is part of where at least his opinion changed on all of this is, hey, these guys all really like it. This was one of the reasons why they helped me get elected. And so I like crypto now. It's like just the other day, he's like, state of Arizona, great state. I love Arizona because I won Arizona. It's like
Yeah.
that's kind of his philosophy is if that's why it seems like part of the reason why he likes crypto. The second thing is the idea behind a sovereign wealth fund. He wants the government to own a big sovereign wealth fund, just like a lot of countries have sovereign wealth funds, because we shouldn't just have debt; we should have assets as well. And crypto will, be something that will continue to make money into the future in terms of the price going up. That has its own problems that I can talk about. I don't think that's true. I think Bitcoin will go up, but if the government buys anything, like anything other than Bitcoin, it will be used as the exit for everybody. Everybody will
Right.
offload to the government instead.
Right.
Um, but that is not just buying a crypto reserve, starting crypto reserve and buying cryptocurrencies. It's not the US government relying on any currency that they can't control. That's just them buying something for like, just to have, a stockpile of assets. Um, and so that's one thing. I think the idea though that governments will never use or trust a currency they can't control just doesn't line up with history. Most of
Mm.
the time, governments will they will use and abuse they will use any currency they can abuse the most. And you can't
Yeah.
abuse a currency that nobody will accept as payment. And so at a certain point, if you abuse your own currency that you control too much, then the people you are trying to pay to maintain power will only accept a currency that you can't abuse at all. And that's why we've seen throughout history, every time a fiat currency collapses, it gets replaced by gold. And
Right.
if a government tries to replace that fiat currency with a new pure fiat currency, it immediately fails.
Yeah.
The only time the new one sticks is if it's basically gold, because the people understand, oh, they can't abuse this one. And the reason why that happens is because while that fiat one is collapsing, the people just naturally go back to using gold or a
Right.
different currency that is backed by gold. And essentially, that's just using gold. And so the new government, if they want to maintain power, they need to maintain purchasing power, which means that they need to use the payment, the currency or the money that the people are already accepting as payment. Um, and so and so the government having a reliance on, let's say, Bitcoin or on gold is is something that is forced on governments if they abuse their own currency too much. If they don't abuse their currency too much, nobody will ever care. If the government never messed with the dollar, Bitcoin would have never even been invented. And
Right.
so, um, and so as long as they turn the ship around significantly enough, then the dollar will maintain its global reserve currency status for a very long time, regardless
So
of what they buy.
I should have said voluntarily use a currency they don't control. They'll do it at
Right.
the end of the barrel of a gun.
Right.
So definitely uncertain times right now. So much going on that I don't think many of us are used to. Many of us are familiar with. What are you watching right now? What should we be looking at that the United States is doing?
Yeah, I mean there's a lot of stuff happening every single day. I think in terms of like the big things to watch are the direction.
Mhm.
So direction and speed matter a lot more than current location, if you will. Like it's the tortoise versus the hare. Uh, it doesn't matter if somebody's far ahead if somebody else is coming up from behind and gaining speed, right? So when you look at the direction that the United States government is headed with its finances, it is headed towards collapse. There's no way around it, financially speaking. Um, and so and so direction matters a lot. So if you look at this year during 2025, and by the end of the year, the deficit at the beginning of the year would have been 2 trillion, and by the end of the year, the deficit ends up only being 1 trillion. That's a fantastic direction. Um, the year after that, it ends up being, 500 billion, or who knows, even somehow they figure out a way to run a surplus. That is a fantastic direction. And so a lot of things can be solved. Like its compound interest works both ways. If you gain a half a pound a month. During your 20s, you don't notice. During your 30s, you start to notice. During your 40s, you really feel it. Then during your 50s, you look up and you think, man, how did I ever gain 75 pounds? Like that's ridiculous. I'm, morbidly obese now, and now it's going to take the rest of my life to get back into shape or whatever. And then most people give up. But it works both ways, because if instead you say, okay, well, I'm going to lose a half a pound every 5 months, and you start to just turn that direction around, eventually those actions compound on themselves, and you get into the mindset of a healthy person. You start making better decisions and maybe moving more, and that half a pound every 6 months turns into half a pound every 2 months. And compound interest works both ways, and it's the same with money. If you start making worse and worse decisions, eventually you get to a point where you're running a $2 trillion deficit every year. But if you can just turn the ship around, it really doesn't matter if you're still moving backwards, as long as that speed is slowing down, and eventually you can start moving in the correct direction. Um, and so I would be focusing on that. The specific things to focus on, I think, for government spending would be what, if anything, they're able to do with Social Security, Medicare, and military spending. Because once the deep audits start with where all the money has been going, that they've been giving to the defense budget, where all the money has been going that they've been spending through Medicare and Medicaid. Um, there's definitely the ability to have a better, stronger military with a much smaller budget, better, higher quality healthcare with a much smaller budget, um, and that's even if your goal is to increase the quality of those things through government spending, rather than just flat out cutting spending. So those are the big three that we definitely need to watch. Um, in terms of fiscal policy. Monetary policy right now, not a big player. Over the last 5 years, it was a much larger player. You watched what the Federal Reserve was doing with interest rates, with its balance sheet. Um, Everything that it does right now, it's basically following fiscal policy. We're in a period of time
Oh,
called fiscal dominance, where what the government decides to do with spending and taxation drives everything. And so the Federal Reserve will largely follow along with that. We're not going to see any big economy movers from the Federal Reserve. Um, so those are the big, large scale things in the economy that I think are important to watch right now.
that'll be quite the feat if they can if they can successfully reduce the budgets of Medicare, Medicaid, Social Security, and the defense budget. Because as you mentioned earlier, Social Security, we talked about third rail, and then the defense budget. Like, isn't it? I think I read that there's a different part for it made in every state to construct an entire to construct a single plane, just because to make sure that all of there were so many entrenched interests, so the budgets would never be cut. Like that's just
Exactly.
that the DoD is not going to take that lying down, I would assume.
Yeah, definitely. Everybody who's on the receiving end of that will fight till their last dying breath to make sure they don't lose a penny of what they've been receiving.
Yeah,
And that's across the board. But there's so much waste,
yeah.
borderline fraud, if not just outright fraud, that like you talk to anybody who's ever been in charge of spending decisions anywhere in the military, it's like, $1 million toilet seats and $1,200 coffee cups, and just anything that costs $10 in the free market costs $1,200 with
Yeah.
in the military. Or healthcare is the exact same way. You talk to anybody who's involved in Medicare at all, health insurance, healthcare at all. It's like there's so much money being spent, so many black boxes, and lack of transparency, and it's just an absolute nightmare. And that's all fueled because there's a blank check written to them every single year, so they slowly ratchet it up.
It's interesting that they're trying. We haven't seen that at least when we spoke
Yeah.
last year. It wasn't being addressed. So at least it's being spoken about, which I guess is at least one of the first steps to solving the problem.
That's true. Yeah, you
Yeah.
either do it voluntarily before it's too late, or it happens
So
to you.
yeah, someone else does it for you.
Exactly.
Yeah. All right, Joe Brown, Heresy Financial. I'm going to leave a link to your channel in the description. Make sure you check it out. It's a wealth of knowledge. And thanks so much for joining us today.
Thanks again for having me.
Thanks, Joe.